To the FMCG and the overall consumption, and with the volatile raw material prices, how a company is dealing with it. That's something that we'll discuss with Manoj Verma. He's the COO at Bikaji Foods International. Hi Manoj, good to be speaking with you. Anisha this side. To begin with, of late the palm oil prices have been very volatile. Call it the impact of heavy rains in Malaysia or the other things. It's been something which has been impacting a lot of FMCG companies. How have you been dealing with the pressure?
Hi, Nisha. Good morning. I think the palm oil is the most spoken stuff today in terms of commodity for our categories. Yes, it has gone far beyond one would have expected, and so to make up this, there's certain amount of cost is being passed to the consumer, and I think in the quarter to come, we will be passing a little more to the consumer.
Quantify that. What has been passed on? What more is lined up? And what will be the impact on margins because you haven't fully passed it on yet?
Yeah, so I think 2 to 3% cost has already been passed, and the similar kind would be going in, in the next quarter, maybe end of this year. So end of December to say January, we would pass the balance of it, and this impact would be, bringing into say about a 1.5% to our bottom line kind of results in this quarter.
No, so sorry, just help me clarify. Your EBITDA margins last quarter was 14.8%. And profitability was close to around 68 crores thereabout. But if I had to ask you, let's say Q3 picture, are you saying that the margins will be higher than 15%, 15 and a half, 16% because of the price, pass through that you've done?
No, so as I said that the full cost is not being passed to the consumer. So this is gonna hit our bottom line. This quarter is yet to end, so there are a lot of stuff which we have made. Teams are working, so would not be able to give you a number at this point in time. But yes, what we see is that this would be a little lesser than what we have delivered in the past.
Down to 14% or even 13 and a half or 13 levels.
Yeah.
Sorry, go ahead, Manoj.
Yeah, so it'll be less than that. So 13.5 is what we delivered in quarter two. And what we expect this would be about 1.5% lower than that in terms of which is net of PLI numbers I'm talking about.
But what is stopping you from cutting grammage and keeping your margins intact? Because that's how FMCG companies have moved in the past.
So when we say price increase, so this is a factor of both, increase in price and for price point SKUs such as rupees 5, 10, 20, where you cannot increase price. So there is the grammage reduction. So both falls in the price increase kind of stuff. Price per kg goes up.
And what demand is the quick snack market moving? Is there a way which we can look at how organized market, what is the rate of growth for organized market, what is the rate of growth of unorganized market?
So in the past, it's been observed that during these inflationary pressure times, so unorganized sector gets a hit. What is expected, in terms of the organized space at this point in time, would be growing in say about 6 to 8% category growth is still expected.
Now, at a time when FMCG companies are struggling with soap sales, shampoo sales, toothpaste sales, how does this entire pattern work for a snack company? I mean, does bottom of the pyramid has to do well for you to do well, or this demand is inelastic?
So when you compare with these shampoos, the personal and home care products, so they are more planned stuff. I mean, this stationery is more of a discretionary spend. It's an impulse category, and also it's on the go consumption, which is very very huge. So therefore, and even otherwise, if you look at in the FMCG space, foods category has done relatively better in that space, and within foods, if you look at so stationery or what we call the impulse category is done relatively better.
Uh, and the general view is that a 5 rupee snack pack is something which is rural or bottom of the pyramid. A 50 rupee pack is something which is urban and upper end of the pyramid. Is that true? I mean, how does it work in terms of a consumption pattern or a reference point?
So that's true. From rural standpoint, 5 and 10 rupee are very very major SQ price point. In urban also, if you look at, so in household consumption, it is the large pack, but still you have a lot of people, on the move kind of a stuff, single consumption, one time consumption. So it is equally important in the urban places as well.
Although, Mr. Verma, the acquisition of the stake in Hazelnut Factory and Food Products was small. I just want to understand what this means for the QSR vertical and what kind of contribution this has to your overall business and what the plan is in general when it comes to QSR.
So it's a very small acquisition what we have made, right? So the Hazelnut factory, in all likelihood, this would be generating a revenue about 65 crores kind of a stuff. The strategy is to have, make a house of brands. So it's a small North India operated company. Started from Lucknow. They have stores in Lucknow, Kanpur, also in Delhi. That's where it is. What we expect is that this company, with the kind of throughput per store and the expansion plan for next 3-4 years, should be so in a tune of upwards of 300 crore kind of a revenue, which the Hazelnut factory could be able to generate.
Okay, point taken. I just wanted to come back to the point of the volume growth and the consumption demand trends that you and Nikunj were discussing. You talked about how you're expecting the category growth to be around 6 to 8%. Earlier, I think you've done a volume growth of 15% in Q2, and we were expecting a similar number or better because of the festivities. Could you talk to us about in Q3 what kind of volume growth should we anticipate for the company at the consolidated basis?
So we would certainly be upwards of the category growth, and which is what we always have been talking about and delivering, right? Overall, if you look at stationery, certainly would be a double-digit growth now for us. However, if we look at the sweets, which is almost about 12.5% contribution to our business. So what we say and how we look at it is it's always Q2 and Q3 put together. So Q2, we delivered a growth of upwards of 25% in sweets, and which would not be the case in Q3. But sum total, if you look at our sweets, will also be a double-digit growth kind of stuff. So sweets, with subdued growth, might bring overall growth down, but in stationery, if we talk about, will be a double-digit growth for sure.
Okay, so point taken. That's the view coming in. I was hoping for a number perhaps on that one as to what the volume growth would be. With maybe high teens is at least what you could leave me with, Manoj?
So not high teens is what never we have done, and never did we speak about it. What we do aspire to deliver or what we the plans, what we have is mid-teens, 13 to 15%, in the steady state, that's what is the number, and maybe by end of the year, that's the number we'll be looking at.
That mid-teens, and we talked about the palm oil prices being the single most talked about issue. Are you looking at some ways of perhaps diversifying that, looking at other, whether it's sunflower oil or soybean oil and all of that? And is that something which is doable for you in the first place?
Yeah, so we do a lot of cottonseed also, right? So at one point in time, cottonseed used to be, more expensive than the palm oil. Today, the scenario is reverse. It's, a few rupees below palm oil, and that's the shift, what we have done, and so which is what we would be doing going forward.
We let you go. Thanks, Manoj, for making time and speaking with us today. So that's the clarity coming in. A part of the prices have been passed on. The raw material price hikes have been passed on, but there could be more price hikes on the anvil. And for now, the margin can be to the tune of 12 to 13% for Q3. That's the word coming in from the management. The stock is lower despite the kind of consumption trends that we have seen at this point of time. Quickly taking.
If you like this video, then like, share, and subscribe to ET Now.